Right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for March 22nd, 2022. I see Ken, H, and Luke. If you can stick around afterwards for about 5 minutes, have a business opportunity that you're going to like. This is a snapshot of Griff Cooper's Cornell note sheet for the March 12th Foundations Q&A podcast, in which we spent some time on the nuances of developing exits that fit you and why you need to spend your time working on that in order to express your ideas, your values, your risk, and to start with standard entries, but then develop your system for personal implementation on the basis of how you manage the exits on patterns that will get you well started, generally speaking. He's added thoughtfully the timestamps and some connections to system, self, and markets. You know, he's the bass player in our favorite band, Phil Wu and the Interns, our house band. So +1 to Griff. Keep up the great work. Doing awesome. You will continue to earn free access to all courses if you keep doing that. I'm just telling you right now. Here is a note sheet for the Strategic Systems Thinking Workshop that I've put together in the past. I'm getting ready to start it up again. This is one that goes into some details on applied thinking of systems and strategic thinking, not just in the world of trading, although there's a lot of trading in there, but it's also of general use to developing the habits of mind that strategic thinkers and systems thinkers have. And that has a direct payoff for you as a trader, in the same way that it has a direct payoff for the strategic leaders and organizational leaders that I've been training for the Army for 25 years. This beautiful artist's rendition of our learning ecosystem, I have the original that's on about 2 foot by 3 foot poster, and it is magnificent. It really captures the essence of our water-driven ecosystem. This is like choose your own adventure. Where are you in the development of skills? Where is your dojo? Where do you live? How do you harness the power of natural forces to establish an enduring advantage in this battle for survival and thriving for the good of the tribe? My favorite areas, one of them is down here by the mill that uses water power to grind all the grain raised carefully by the folks in the village for commerce. I just love this thing. My dojo's up in here somewhere in the Misty Mountains. A thing of beauty. So those are all uploaded at Patreon, including the PDF of this if you want to get in and really appreciate the details of the artist's rendition. So just amazing work. Here's one that I think says it all. Last night I was asked, hey, Ken, why do you charge so much for the TC2000 bundle? You know, that bundle that has 25 of different layouts, that has all of your strategies, filters, sorts, alerts, different setups for charts and so forth. How come you charge so much for that? And then somebody asked me later, hey, how come you charge so little for that TC2000 bundle? Because they understood something. And my business coach yesterday said, hey, why are you selling that bundle at all, since the real money is in using it for yourself and your trusted friends, or selling subscription service of the signals to others on a worldwide basis? And I just say, well, I don't know. The value of information independence is priceless. That's what I think about the bundle. I'm not going to sell it for nothing. So I'm going to sell it for something. On we go. So someone asked me last night also, why do you set alerts for price actions around critical states so that you can set it and forget it and then get alerted when it happens and you're immediately ready to act? And I said, well, because that's my job. And then somebody asked me last night, why do you frame minimum manageable risk boxes around those critical states and look for super pinches especially? And I said, well, because that's my job. And then so today, we identified BKKT in a critical state yesterday, and in a critical state today at about 10 a.m. And the 20-cent standard risk at $400 risk per trade gets you a position size of 2,000 shares. You buy the breakout on the alert. You buy the second position when you're at 2R plus momentum in hand. You move each of those positions to no lose plus dinner for two when you can, because that's your job. And then your job is to choose your own exit anywhere north of this red line. That's your job. I exited here on a collapsing dragon and caught a 2 to the downside and exited at 7.15. So my entry at $6 and exiting at 7.15 on the first position captures $1.15 on a 20-cent risk, which is about 6R. That's $2,400. And the second position earned about 7R on $400. That's about more. That trade paid for the TC 2000 bundle. So I'm almost in agreement with my business coach and the person who asked me why I charge so little. So today, well, here's why critical states, by the way, because you don't know what the market will do. So you should know what you will do ahead of time with rehearsals in both directions, answering all the standard framing questions. Here's what happened in the market today. Yesterday, we had identified that there was a critical state at the top of this little 4-day run up that we've had that terminated in a doji right at the edge of the river. It gapped up slightly at the low of the day and then finished strong halfway towards Z2, made a new 10-day high. The 30-period regression line slope is up. The PSAR is moving up nicely. We're 6.5% off the swing high. The RL10 and price is in the spring and growing season. We're starting to approach proximity to the 30-day high and the RL270 long-term fair value approaching Z3. All systems go. Today in the markets, in the sectors, I should say. Let's see, we had, let me zoom in a little more. The S&P at 1.17. Emerging markets were a little better at 1.8. The Qs were up 1.97. And I think that was the best performer of the day, if I remember. Yeah. And also up for the day was the Russell at 1%, diamonds at 0.78. And the only negative feature today was treasuries, as we're seeing a rotation from defense to offense, as we talked about last week, at down 1.28, and it's now below the key price level of 130. Let's take a look at the sectors that were worse than the market. We had Brazil was slightly less at 1.13. Consumer staples, materials, marijuana, lumber, agriculture, the other lumber, blended commodities now getting us into the negative territory. So that's all between 0.7 and 0. Then we picked up oil exploration, energy, wheat and precious metals at minus 0.89. Oil itself down 1.23. And then the VIX off 2.19%. Underperforming targets of interest. Devon Energy off 1.3. Cliff, U.S. Steel, and Alcoa, all the metals gave back after the extraordinary run-ups of the last couple days, off 1.09, 1%, and 0.89%. So that was the underperformers. Everything else outperformed the S&P today, and there was a lot of that. So let's take a look. Technology, finance, up 1.6. Mexico up 1.7. Clean energy and lithium 1.88. We've been talking about the alternate energy there for the long-term strategic, and I think the corner's been turned on that as we discussed this weekend. S&P discretionary 2.48. Bitcoin 2.8. Simon Property Group, commercial real estate 2.9, blockchain, moonshots, biotech, FANGs, Ethereum, both of the ARCs all up, up to 4.6. The blended large cap crypto 5.2, global future of finance ETF 6.65. And then Bakkt Holdings 7.10, up 23% out of the Z3 pinch, the super pinch, which the alert just tells us according to rules. Tesla up almost 8% to closing in on the key price level of 1,000. That should tell you. Rivian 7.75 in sympathy. Coinbase, Squarespace, and the financial disruptors up over 5%. Robinhood 2.9, PayPal 2.8, Apple 2%. So you can see it's all the usual suspects. The entire risk on disruptors to the front, and off we go. Just for fun, I've been messing around. I fixed the problem on the range stat on this little prototype I have been working on in the latest TC 2000 bundle edition. This is the one where I am looking at, let's see. This one was reward to risk ratios that for daily swing trades that are looking for a 10-day high that were better than 2-to-1. The only ones really out of the boot camp selection, the symbols that I just showed you that were better than 2-to-1 is the VIX and treasuries, and energy, wood, and wheat and precious at 0.9. And this gives you the other the trading information you need to frame trades for the intraday as well. If you're looking at for 1-day pops, you look at the range stat versus my risk, and that gives you the idea of range compression compared to the maximum reasonable intraday move. So if you get a directional move and you're looking for a 1-day pop, the higher number on this is better. So the range stat divided by my risk, and then the R stat itself tells you the dollar value of what that move might be. And then these three in blue, the range minimum of the 30 tells you what was the smallest range of the last 30 days. And then RMIN 3 and RMIN 4, divide that number by 3 and 4 respectively to give you a ballpark start point for computing your manageable intraday reward to minimum manageable risk box. Mechanical entries and stops for the swing trading 1 day at a time. And this tells you the size of that daily range risk. This gives you 1/3 of that risk. This gives you the 10-day high. This tells you how many dollars you're seeking to capture if it were to go test the 10-day high. That was from the boot camp. This is if you just were to array that same display and show all of the Dow 30, just the big fat cows, and you wanted to add the seasons of MACD that we care about: monthly, spring and summer, weekly, spring and summer, daily, winter, spring, summer, and fall. You get that array there, and then you have all the same standard numbers here. I happen to sort it by reward to risk ratio, because that's the one that I like for using swing trading 1 day at a time with end-of-day data. But I would use the range stat versus my risk to get a sense of coiled spring ready to explode. This gives you the same information that's in the daily report that we'll see later, but this is computed in TC 2000. So you have this information 1 second after the market closes for up to 10,000 symbols if you want it. This one shows for the S&P 500, those symbols that are in the better than 2-to-1 on the reward to risk ratio for the swing trading 1 day at a time. So you'll see some symbols in here that we don't normally follow, although Verizon is one that we follow. But this gives you the idea if you wanted to widen your aperture to look at more large cap stocks that were strictly in this region. That's what that module on TC 2000 might give you with all the standard framing data. This one gives you an idea of, I'll Oh, I didn't capture all that. You can also have that. I had DIA, for example, was excellent because that was the best performer on the daily squeeze. It has a 3.8 to 1, and then you can actually have it set up so that you can show the chart. I didn't capture all of it, but you can have it show on the daily chart the actual framing. So as you go through these symbols over here, you would see that the chart scale up for it. Oh, and here's the one where I actually did it correctly. So this one shows you DIA that has a 3.8 to 1 ratio. And you get that by having relatively large ranges over the last 30 days. But today's price being compressed to a nice tight move. So you get, if you were to use, the standard risk of a range, you would have 3.8 boxes to the upside if it were to move a range stat, or to the downside. So the breakout in this case you can see is large in either direction, and you get that because of the range compression after a large directional move, which is halfway up the stack, which is the far side of the river, which just completed a successful SSC off a 10-day low. So this is halfway up. This is naturally a place where you would expect it to either make a big bold move to the top or a big bold move to the bottom. The least probable move would be just a quiet sideways. But if that happens, you just don't get a trigger, or you don't win or lose much money. So what? But if you get an expanding volatility move out of that range compression, your reward to risk ratio on that is 3.8 to 1. That's why you would be interested in that particular setup. I was working with Angus Fletcher today on the that Creativity 202 course. He loves it, the Fletcher treatment for traders, and it's ready to teach. And I'm going to release that to a mailing list of about 200,000 people in a couple of weeks. And I'm going to take the first 40 people. This is the write-up on the field guide that I asked him to write for the Army. It took all of his research work and chunked it into a nice, concise 123-page book with 30 chapters, 30 exercises for Army leaders in a 5x8 field guide that fits in your pocket. He wanted to give it to us, but I insisted that we pay a little bit for it. And the purpose of it was to provide Army officers a bootstrap guide that you can use to train yourself to be more creative. It was published in September. It's now a bestseller. It's the #1 bestseller on Amazon in the world for educational leadership. There's one course in the world that takes those principles and applies it to specifically developing creativity among traders. That was, and it was designed by me with his input. And that's that course, ready to teach. So there we are. Let's take a look at the traders today. This is Arch with the Aussie dollar. So this is a form of the 5-minute Aussie. He does a nice job on this thing today. Let me get my little annotation going. Nice Kata 2 coming out the gate. He looked at that one as a potential second. Oh, added a scoop and then sold a scoop, I think. And then got paid. He did a re-entry, sold off, stopped in reverse, got paid. This is one I think we gave back too much on. When you're already that far in advance, that's at least an R. I'd like to see you exiting somewhere in here instead of all the way back here. I mean, I respect the fact that we are at the PSAR, but when you see us down at this level, this is the test case of this bottom of the dragon. If this doesn't fail here, then it's going to go up. Just like here, it didn't fail here, it went up. So when we're in that critical state, it's time to fish or cut bait. You either fail for me right now, or I'm going to just harvest this nice big win, and you will get double the return on that one. This is a nice effort after it holds support at the same place it held support and breaks out, and you get the PSAR breakout here. I like that one. This is a good exit. This is a better re-entry. That second scoop kind of scratches. When you have two positions on, you got to be able to exit this so that second position is not diminishing the returns of the excellent first position. This is a good aim for this capture, a great exit. Your stop and reverse should be right there, especially after this move. And failure to fail here and failure to fail there. This failure to fail should be exited and then immediately reversed. Then you'll get a better payoff here. Here's another kata 2. But all in all, this is really good work, and you can make a living on that. This is less in also the 5-minute Aussie. There's a trend here. Great short position, got paid. I like that. I'd like to see a re-entry somewhere either in here or in here. Oh, so would you. Fair enough. PSAR flip. Yeah, this one I probably would just exit right there and probably stop and reverse, because you've had this nice big long move and the last big urge was down. And this thing didn't even get through the VWAP and rolled over. So I think I would try to stop and reverse here. But I respect the discipline, and you got paid here on the CD. This is a good SSC. I'd like to see the reversal here, but you got the same price. You got paid. Very well done. 2.3. Good job. The nuances don't add that extra much value, but over the long run, it actually does. But that's good work. Here's Griff with the SSC only for the record. For those of you practicing this at home, here's your SSC. There is, I think that exit is late, but I think we could live with that. But after a nice peak, and then it tries again, I think maybe another bar earlier. This one is a strict reentry. This is also one that if I get to here, at least we scratched. I would hope maybe someday we could get paid a little bit. But if you can capture no lose plus dinner for 2 in the long run, when you capture a bunch of little 0.2s, you're adding a 0.2 efficiency to your expectation. And that little difference is what funds Las Vegas. This is a perfect SSC. This is a good exit. Obviously, we'd have the kata 2 on this one and this one and this one. We just scratch this one, and this one you could almost argue is an SSC, but I really see that more as a kata 2 because you have a low, a higher low, a higher low. So I agree with your assessment that this is really a kata 2 and not an SSC. That's not really the kind of harsh winter that we see in this one, for example. So well done. And that's a positive day. Wojcik in the 5-minute Aussie, also positive. Gets paid, fractional loss, scratch, gets paid a little bit. If you're going to be that quick, at least we didn't let it go negative. This is a pretty good reentry, but then we let it go negative. Again, if you're that far in, at least scratch it. This is a great stop and reverse. This is a better reentry that got paid. That makes the difference to make this whole day positive. Standard. This is the one where we got to crush this short. Wow. So take a look at that collapsing drag, especially with this much price invested in not breaking out to the upside. Didn't break out. Now suddenly this breakdown here. Yeah, I'd like to get earlier or maybe in here. Still, that's pretty good. Five-minute Aussie here. Oh, Got to love that. Now, when you see this, even though you just started trading here, that is still in play, and you're already past the Z3, so you can buy this in here somewhere. Even though you probably don't make much on it, and then you get the reentry, you can still get that. I feel a little disappointed that we were a full R in hand and only made it a scratch. Well, no, I guess maybe we got a little paid. That's all right then. Got paid, micro loss. We got to get paid in here a little better than that, I think. That's a good payday. This is the one we got to have. So we just got to work on resetting our mind, and this one pays for the day. But this is pretty good discipline all the way through there. See my notes on that. Luke with the 5-minute Aussie, 4.5. Micro loss, gets paid on 2 positions, gave back way too much on a Z3 excursion. We spent 15 minutes down here and gave back 2R. We gave back 2R on that retracement. Same thing here. We let a winning trade that was 1R in hand go negative. So there's 3R in slop that we got to fix there. This is good discipline. Pretty good exit. This is one on the big reversal. When I see a huge bar that doesn't even follow through, gaps, closes lower, starts selling off, I'd like it either at the 2-bar low or halfway down and just enjoy the ride. And especially on 2 positions. That's probably another 1R that we could have gained. And then this is slow. Man, missed that one. Oh, come on, Luke. Scratching this, we should be entering here and exiting somewhere in here. That should be double. This should have been 10 plus today. I was going to praise you for 4.5. And then you're being precise in here. So let's be precise in here. And this is good. And if you'd had more time, that's your good kata 2. So this is about a C- day that nets 4.5. So, all is forgiven. Don't let your wife see that one. I think this was Wojciech working on the WMB3 for the first time. Let's see how he's doing. I sort of like the fact that he's going to be up 5R for the day. So there must be something in here. So tick, uptick, buys that, tight stop. Good. Tick, uptick, buys the uptick. That's close. I'll give you that one. I think what you want is a standard risk box so that you're not, unless that was the MMRB, then that's okay. This one restarts again. Here's the uptick. He buys it. There's the stop. Works it here. Decides to get paid. That's good. Oversold. Here's the uptick. Buys the uptick. Crushes it. This is where your kata 2, even though this is not oversold, the fact that it's well overbought and reverses up, your kata 2 mentality should give you this one and this one. And so this +5 could have been +10 today. This is a good shot. This is a great one. Good shot. And now somewhere in here, notice when you have, this is not the WMB3, but this is a continuation. When you have oversold, pulls back and goes oversold again, this little uptick lets you buy that, and then you get this. That's your kata 2 as applied to the WMB3. There is a whole research project in there and a lifestyle. And if I'm being honest, a career in that idea right there. That's pretty good for the first day trying it out. His net for the day was 5.3. So it gets a little choppier in the afternoon. Remember, WMB3 is really geared for early morning moves, but it's not impossible to see those kinds of moves. Like this one here, We want to buy this one. When it reverses higher, we could get this where it goes up, pulls back, and re-emerges with the uptick. You end up buying that position with that risk, and you crush this, and you get that. So this could have been plus 15 with an understanding of WMB3 plus COTA 2. That's just free chicken right there. Somebody's going to ask me for a workshop on that one, I bet. I'm just guessing. They wouldn't be wrong. I can see Ken Hum already programming this in his auto framer. He's boring that way. Let's see, home, zoom, width, oops. Page. All right, let's go to, what is, this is dashboard number 1. We're still in sideways normal, so let that be a guide, but now things are looking much healthier. Not surprised as we look at the COTA 2 formation in the risk C that we've been talking about. It now went positive, so we are in risk on. All systems go, looking for returns to all-time high with overbought conditions. We're just mindful of how bad things are, that there is a real concern in sideways normal conditions that it can turn on a dime, and then all of the indexes are in this dramatically what would be seen as a dead cat bounce. So we're mindful of that. That's why we are still prioritizing intraday moves from critical states, because we are in sideways normal conditions. But we're noticing Intel, diamonds, Microsoft. Notice the diamonds are 10-day min pain along with Microsoft, Coke, and Verizon. Lots of dojis today. That's complacency. Only a couple things are that far away from their 10-day high that you get the auto framer engaged. Not surprisingly, that's Chevron and ExxonMobil. Lots of dojis, lots of overreaction signals to the short side in the overreaction system, and that's simply reminding us that the entire market has moved off of the lows of despair and are halfway back up the stack towards the all-time high. Only a handful of symbols better than 2-to-1. Gold at 9-to-1, treasuries at 8-to-1. That's a very clear rejection of the defensive plays and a return to strength. And finance continues to amaze. We talked about that last week, and finance is continuing to lead the way. Auto framer, the usual stuff. This is that yellow zone for the one-day pops that I was showing you about before from the TC 2000, and we had an extended discussion this weekend on how to apply yellow zone to your trading. So I'm not going to repeat all that, but there's plenty of goodies to choose from. And again, diamonds in the number 1 position. We have a lot more symbols now in the summer. Plenty in the spring. Almost nothing in the winter, with the exception of treasuries and Verizon. So that shows you that it is a market-wide phenomenon of seasonal reversals. This is not isolated moments of strength. This is everybody getting on board after a 12 or 13% sell-off and correction. This is a return to high adventure. We're still mindful that it is sideways normal. So there it is. Lots of goodies on the 10-day. So when I see things that are really strong on the 10-day and the 2-day and on the 30-day, that really gains my attention. Asia less Japan had so much room to make up that it's recovering nicely. The Qs looking very strong. Brazil just will not be denied. Mexico laughs at Brazil and says, "Hola, look at me, mira." Caution. But still, this is the first day out of that doji, out of that, the first leg. So a second leg would take this back up to all-time high, which was right around 480 and some change. So that's the potential of this next leg up as we look at that. Okay. The turning point I want you to see was this moment here, where you had the slope of the RL30 go almost 2 standard deviations below the long-term average, then crossed its own 10-period moving average at a distance more than 1 standard deviation from average. That often signals the swing reversal that you're now seeing here and in price. If you just run that north, you see that on the third day off this bounce, it's already telling you that this just might be a bottom, that we might have seen the bottom at 420 and potentially some upside. So that's the use of the 30-day regression line slope of the market being the key towards describing market conditions. This just gives us multiple angles. This one puts that into long-term context. That's how bad that was, that little brief momentary sell-off from the war. The second worst in the last 10 years, only eclipsed by the pain and suffering of COVID. So that's something. Yeah, we've reached the far side of the river. Dragon peeking across. Is he going to come up all the way to the previous swing high? We shall see. Yeah, Latin America looking good by all measures. The Russell and small cap growth, not bad. Really strong short-term performance here in the Qs over the last 5 and 10 days. You can see the strength shifting to technology in the form of the NASDAQ and in the tech, and just the clear assassination of the treasuries as defensive money is rotating over into growth. And you can see that XLY, consumer discretionary, is defeating XLP on a statistics adjusted Z-score basis. So in this case, the green is better than the white, and the 2.84 is better than 1.58. So this is a clear winning of consumer discretionary. And the rest is kind of details. All right. That's everything I got for you tonight. I think that's it. Yep, that's everything. Thanks for hanging in there. Appreciate your patience. And if Ken H, if you're still around with Luke, I got this Luke in here. I mean, I can catch you tomorrow if it's better. It's kind of late.